Welcome to the Cashflow Project podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cashflow Project podcast. I'm your host, Steve Fierros with Tri-City Equity Group. Today, I'm excited. We've got Eddie Speed on the show. So Eddie is one of the nation's top noted educators with more than 40 years of experience. We were just talking about this. He founded Note School. It's an esteemed training company that focuses on educating individuals about purchasing both performing and non-performing discounted mortgage notes. His structured note investing education has led thousands of students to success. Additionally, he holds the positions of owner and the president at Colonial Funding Group, specializing in acquiring and brokering discounted real estate secured notes. Furthermore, Eddie's a principal in a family of private equity funds dedicated to acquiring bulk portfolios. So I'm excited to have you on the show, Eddie. Welcome to the Cashflow Project.
Thank you very much. I'm glad to be here.
Yeah, no, absolutely. Well, I'd love to dive into kind of your take on your investing strategy, because I don't think we've ever had anybody on specifically focusing on notes and your specific area of expertise. But kind of before we dive in there, I know you've been in the business for a while. How did you get started in the business? How did you get started? Did you get exposed to real estate? Was your family investing in real estate? Have parents that were bankers? How'd you get going?
Well, I would love to tell you this sexy story that I was from a lineage of 5 generations in the finance and mortgage business, but none of that would be true. Really, I was a poor kid from Mississippi that grew up in the cattle auction barn. And my dad was smart and was a business guy. He wasn't a blue collar guy, but he wasn't really taught about finance. Later in life, I taught my dad at 68 years old how to go do what I'm doing. But I was introduced into the business in 1980 by my future father-in-law. And he was in the seller finance note buying business. He had been a real estate investor, had apartments, had rent houses, all of that stuff. But then the market became very conducive to buy notes. High interest rates and inflation and all that stuff meant that rent properties weren't as profitable. Rents could go up, but expenses way surpass rents, which is kind of what's happened now. And so I was introduced into the business. I didn't have any big measurable background in the business. I was willing to work. I was willing to hustle. That's kind of all I could bring to the table. I didn't have money and I didn't have knowledge. And 2 years later, me and his daughter married, now been married almost 43 years. And we moved to Dallas, Fort Worth to buy real estate notes. And initially we just kind of bought notes from mom and pop, that individual that seller financed a house or a piece of land. And that's kind of how it started. And then it morphed that I kind of trended towards the professional real estate investor and helping them with seller financing.
Yeah, no, I love that. You highlighted a couple of things there. I almost hear rich dad, poor dad kind of in your story. Like for a lot of us in the real estate space, that's a purple Bible. But we're not always taught those things from our parents. And they give us the best that they have, but they don't know what they don't know. And so you were able to get mentorship from somebody who was already in the space, who was already operating in this kind of creative financing route effectively. And then I love too that
no doubt. I mean,
yeah,
you wouldn't know my name today if it wouldn't have been for that story. There's just no way.
Yeah, so that highlights a key point that for our listeners, for our people kind of tuning in, you got to get mentorship. We don't know what we don't know. And there's plenty of times, and I'm guilty of it too. Oh, I've got experience doing X, Y, Z. We think that there's nothing else that I can learn. I'm like, man, that's always a dangerous spot to be in. There's always more to learn. Part of it too is, for one, there's so many strategies to invest into real estate, but also too, the market changes, right? Just to your point, hey, we're in a different cycle. We're in a different stage of this market cycle right now, right? It's all cyclical. It doesn't stay static forever. And so something that worked for you 5 years ago or 10 years ago may not work now. You hit the nail on the head. I mean, hey, you were walking through living out kind of a similar time when you got started to where we are now. High OpEx, high interest rates, rising costs. That sounds a lot like what we're dealing with today. So
yes,
yeah, okay. Yeah, so kind of fill us in. How does that work? Like, how do the mechanics of this work, and why going this route versus, let's say, actually holding on to the assets themselves?
Well, I have owned a lot of real estate. I bought notes where I knew that the customer defaulted, and I bought more properties via through notes than most people have ever bought properties. Like call it more than 6,000 deals. So I have done a lot of notes where I ended up with a property, but I knew that up front. And then also I bought notes because if you stop and think about it, Steve, there's kind of a truth to this. What is the tallest building in most every city?
Bank-owned property or the bank's building.
So there must be something to it, right? Now, I'm not going to take away from the fact that there's been cycles that rentals were the perfect thing to go buy. Like if you bought rentals in 2012 in Texas, you couldn't mess up. Real estate was half price. So you'd buy it, it would cash flow. It was a great deal. You had to aggravate with the management when tenants and toilets, but it was a very profitable endeavor. You were talking about being in the business in Houston, and I'm be fairly certain that you and I probably know 100 of the same people. But I've kind of stayed as the note guy. Like I've kind of been that guy. So in around 1987, I meet a guy. He and his brother were real estate investors here in Dallas-Fort Worth. They created some owner finance notes. They wanted to sell those notes to me, which is kind of what I focused on. That guy's name was Ken D'Angelo. That's the founder of HomeVestors.
Yeah.
I was HomeVestors' original note guy. So in 1990, I developed the seller finance program for HomeVestors. Now, once again, they've become a big Wall Street owned firm and they're very sophisticated. It's different today, but back then he was trying to get started. And literally about 70 or 75% of every transaction a HomeVestor franchisee did in that era was a seller finance note deal, and I bought the note.
Wow.
I developed a system and a process where real estate investors could create notes essentially to a formula, to a recipe. And I did that a lot all through the 1990s and became very well known for that. I bought 50,000 seller finance notes. So the reason I bought so many notes is because I developed a system around creating the notes. Somebody shows up at my doorstep and they've already created seller financing. It's a little hard to fix the mess they've already made. Now they don't feel like it's a mess, but they are not, they don't know the mortgage banking standard. They just know the homemade standard. And so I help bridge that gap. Today, if you own a rent house, you're getting about a 4 cap. Right? Now, it's not going to be quite that good in Honolulu. And it's going to be about that in Houston or Dallas or Atlanta. And so what that means is just easy math. If you have a rent house that's worth $200,000, you're making $8,000 income before you pay the bank. In 2018, that identical house was an 8 cap, meaning that a $200,000 house, you were getting $16,000 income before you paid the bank. Wow. That's a problem. It's the market. It's what you said. Somebody's moved my cheese. I laugh and say, you're trying to eat an equity sandwich. And so how do you fix that? Well, I come in 45 years in this business, 50,000 note purchases later. I've dealt with some of the most advanced real estate investors in the house buying world in the United States by far. I'd kind of be known as that guy that helps. I'm in several masterminds, etc. And I come in and say, wait a minute, guys, I pulled out my calculator here. The deal is if you're making a 4 cap on a rent house, you can make a 10 to a 12 cap seller financing the same identical property. And they go, what? And I go, yeah, it's just math. And so that's what I help people do if you're a real estate investor. And
that's awesome because we need to find some way to juice the return right now, especially now.
I help the market, and I'm in several of the big masterminds. Probably I'm in 3 masterminds that most of the top 500 house buyers are in one of those 3 masterminds, right? So I'm the seller finance guy in those masterminds. So that's just kind of how I found out this is how I can do a give back that's good to me too, right? I don't know a 50th about what you know about real estate, but I know the note business, so to speak. I mean, I know what, but not at the level in other areas, right? But in this space, I'm like, I can help people with this. And then I create a strategy where you can come in and sell part of the cash flow of that note creates. That way you can pay off your underlying debt. You can get some, you can make more profit by far being the bank on the same house that you were the landlord. Goes back to the theory. Tallest building in most every city is what?
Yep.
It's
The
not the
bank was,
landlord.
yep.
So that's a theory. That's kind of my thesis, so to speak, of how I help people that are real estate investors. The other side that I help is, okay, what if you don't own rent houses? Now, by the way, quite honestly, I don't own rent houses. I have owned rent houses, but today I'm the bank, not a landlord. I believe in what I'm saying. And so then I show people instead of buying a house and netting so much money, why don't you buy a note and probably net about 2.5 or 3 times the same income on the same money deployed? And also I can show people how to get leverage. You can get leverage on a rent house.
Mm-hmm.
So let's just say that you had a BRRRR deal, right? Your audience, I'm sure, knows what a BRRRR is: buy, rehab, rent, and refi.
Mm-hmm.
But wait a minute. What if you didn't rent and you sold, and instead of refining, you sold part of the note? Then all of a sudden, pull out the calculator and a whiteboard, and golly, Eddie can whip the fire out of what would have been a BRRRR, right? And I'm having these conversations with guys that are like fractional CFOs for hundreds of sophisticated people that own rental portfolios. Not some little, not some guy that has a couple of houses and the accountant really doesn't quite know what the math is. I mean, it's just a market condition. And so I believe for your audience, think in terms of people that are invested in multifamily.
Mm-hmm.
Okay. Well, then what's your diversification? Not not saying there's anything wrong with what you're doing, but everybody understands you need to diversify. And what is that diversification? And that diversification, I think the math says it's better to be a bank right now than the landlord.
Yeah, it's true. I mean, for what we've seen in the last stretch, effectively the debt becomes just as much of an asset as the actual physical structure, because of the way that rates are and whatnot. So I mean, we've done so many different loan assumptions because the capital is so expensive. So if you can come up with some creative routes in order to, like I said, you can order to juice a return in order to structure something creative. Hey, awesome! You potentially created another income stream. I love the flexibility that you're talking about too, because so many times, okay, we get locked into one mode of thinking, okay, well, this is just the way it happens. We buy a house, or you renovate the house, you fix it up and you sell it, or you go in, you live in the house, you maybe own it for a couple of years, avoid any tax hit, and then you sell it. But it's like, yeah, what if there's a way where you can continue to maybe earn some, right, additional cash flow without still owning the property, right? And you can do that through your note investing. So I love this. I love the creative component that you're bringing to it. Also, I'm interested too, because you mentioned it, this is not only just for, mom and pop landlord owners. Like, this is not just for, yeah, I've got a couple of rentals, I got ones and twos, that kind of deal. No, you're dealing with institutional players here, right? You're dealing
Well,
with,
not so much institutional players. Like the institutional players, they have a different set of math.
Sure.
Because what they're doing is when their house goes up in value, the value of their stock goes up, even if their income doesn't go up, right? So they're not like that's a different scenario. But a guy that has 30 to 500 rentals, call it, right? He's not necessarily a fund or a Wall Street firm. He's just a guy that built a big rental portfolio, and now all of a sudden it's not making money. I'm repeating about 3 people in the last 24 hours that have had this identical conversation with me. One of them is a fractional CFO that has about 150 clients. Now, he has a pretty big team. He's a fractional CFO. He specializes in nothing but real estate investors as his clients. That's the only clients that he's a fractional CFO for. His words, not mine. My clients basically aren't making money. The second one is a consultant in this industry that, once again, very brand name, represents a lot of people, and he does some consulting for me. And I said, I believe at the moment. Now, once again, I'm talking about on the residential side. I'm not, apartments are not in this conversation. So I'm saying residential. I said notes are more profitable than residential investments. And he says, I 100% agree. By the way, you know who 90% of his clients are? People that have residential investments.
Yeah, for sure.
The,
They're seeing the
the
numbers. He
third
sees the
one,
numbers.
the third one is a well-known guy in the storage facility place. You would know him. He's like super well-known, has a mastermind, super squared away guy, long friend of mine. I'm in been in several masterminds with him, know him very well. And he called me kind of asking me what I thought the market was going to do. And so I gave him some data and here's this and that and so forth. The long story short is I made that statement to him and he says, oh, I can totally see that. So once again, you want to hear something funny, Steve? 2 years ago, I went to some of those big masterminds and I got on stage and I laid out this math. Nobody could hear me.
Mm.
Now I'm on stage and I whisper and it's like I have a bullhorn. You see, what's changed is the market is ready to hear it. Not that the market really changed in the last 2 years. Anyway, that's what an old man's learned.
They just hadn't felt the pain long enough, and now they're willing to listen. Is what it is. So,
but think about it like this, Steve. You're an expert at what, and you see things quicker than the guy that's less experienced, less deep into the space. And sometimes you have to let them catch up with you, right? Our job as entrepreneurs is to be visionaries, to see the market, to be on the horizon with the binoculars and see what's going on. But a lot of times people that are with us, they don't spend the energy, they don't have the years, they don't have the hours doing it. And so we have to let them catch up. And that's just kind of a life lesson I learned. I had to let them catch up. Now, all of a sudden, when you really look at it, the stats seem to be about like this. Now, once again, believe me, I'm around real estate investors all the time, and everybody's got their micro market story and whatever. But nationally, the values went up virtually about double in a lot of places. Call it 70 to 100% increase. But values went up, rents went up about 20%. They went up higher than that, and now they've settled back down, right? But here's the problem. In the same economic P&L, expenses went up by 50%.
Yep.
That is not good math. And so that is what drove this pendulum for rent houses from rent houses to notes. And once again, this is, and I told you this before we start, like you asked me, okay, would you please give my audience something? I said, sure, I plan to. And I'm going to give them a class. And I'm going to give them like books and spreadsheets and materials. Like they're going to leave there with tools, with measurables. But what I'm going to do is I'm going to give them a class and we're just going to whiteboard stuff out. And we're going to test the thesis. Is this true? You got this property, it rents for this, you net this, you take the same money, you buy a note, it nets this. And people say, oh yeah, but I don't get appreciation. And I argue that this math I will show you shows you actually get the appreciation. You just don't have to wait for it.
Mm-hmm.
Does that make sense?
Yeah, no, absolutely. Yeah, and I could see that too, because the pace at which you can move, let's say even through the notes, because you're shuffling paper at that point, your entry and exit is so much faster. And because of that, you're able to capitalize on what the market is doing faster than, hey, I'm going to park some money, let's say, into an investment for the next 10 years. Well, guess what? There's going to be a lot of swings in the way that money is moving. Your velocity of capital really can ramp up if you're doing what you're saying, right, with through the notes and kind of structuring deals, entering and exiting.
When you get the dollar, depends on what the dollar is worth today.
Correct. Yeah.
Right. Present value and future value.
Yep.
You can get $1 in 5 years. It's just not worth $1 today. It's worth about 60 cents.
Yep.
You can get $1 in 10 years. It's just not worth $1 today. It's due in 10 years. You can get it today, but it's worth about 38 cents on the dollar. So once again, those are some things that, and as you said, like you and I could both point to people and circumstances and training and information. And this is what gave us a compression of time of learning this,
Mm-hmm.
right? We can all learn this. It's just how long do you want to take to learn it? And then how many mistakes do you want to overcome to overcome? That's the whole idea is how do you get a compression of time?
Yep. No, yeah. And then as we get older, especially in our investing career, it's like we don't always have the value of time that we had when we were 20 years old, right? So
That's
you're
it.
most of the times it makes sense to pay for speed. That's why your
I
name
was
is Eddie
20.
Speed. Oh, I love it.
Yeah, I was 20 years old when I started in this business, and let's just say that my time availability is different than today.
Yeah, no doubt, no doubt. No, and I love that too. And there was a time where, of course, you'd be reluctant to do it when you don't have the money. That's the time to be able to really amplify your what you're willing to do for speed, so you can fast track your learning. But yeah, it's that catch 22, right? So yeah, just as a general for our listeners, right, for the listening audience, definitely it's worth it to pay for speed if you can. Buy and learn, and that's part of what we hope to provide to provide with with our show is value to the listeners to say, hey, look, Eddie's got 40 plus years of experience here on the investing side, specifically, let's say in notes, but all forms of real estate. We have so many different guests on also that have lots of experience doing a lot of different things. And again, that's the goal is to provide you guys as the listeners, hey, learn from our mistakes, learn from the different strategies. Because that's the thing. There's plenty of people out there that don't want to own property. They don't want to deal with the tenants and the toilets and the turnover and all of and especially now, like rising insurance costs and labor costs and all that kind of stuff really are starting to chew into your bottom line, just to your point. So, okay, well, what else can I do? Right. And most of the time, well, I only saw mom and dad own a house. They owned the house, they owned it for 30 years, they paid it off, cool, they made some money doing that. Well, guess what? That worked in a different market style. And you're touching on it with talking about how little that the dollar is worth today. We're going to have a different value in 30 years, right? In 10 years. And now the pace of the devaluation, oh my goodness, man. I mean, you go 5 years, you go 2 years. Oh my geez, we're talking about some really different numbers. So I love that you can put pen to paper and really kind of do the math to help walk, let's say, our listeners through what that actually looks like.
Yeah, I think that's one of that's where you start with anything. First of all, I say that the note business, whether you're seller financing your own rentals or you're buying somebody else's first mortgage note, that's what a note is you're just buying a first mortgage on their property or you're creating a mortgage on your property if it's
Mm-hmm.
yours. That's a strategy. A lot of things in real estate are just straight up a business. And so people are trying to move from how do I not run a business every day to have a strategy that I can utilize. And that's the time and aggravation and all that kind of stuff. And obviously, you have multifamily deals. Look at your investors that invest in multifamily. What do they want? They don't want to go own a they don't want to be you.
A lot of work.
It is a lot of work. It is a lot of work.
Yeah. And you touched on something earlier too, and I think this is something that's very valuable to the listeners and to anybody that's looking to have success doing anything. You talked about having put together a recipe. You talked about having put together a template. And honestly, guys, if you want anything done well, and especially at scale, you need something that's repeatable. Like a five-star chef can do something super creative and whatnot, but I can guarantee you he's going back to the same recipe that he's drawing from. McDonald's, hey, whether or not you like McDonald's, they are by far the most successful restaurant business, and obviously their real estate business too, but they're successful restaurant business because they have something that is scalable. They have something that is repeatable, that they can pluck any high school kid off of the street and plug them into the system because, again, they have a recipe, and that's what we need for success. So it's exciting that you have developed that, especially for note investing. Eddie, well, this is the part of the show. I'd love to continue to talk with you, but it's a part of our show where we kind of transition to what we call our fire round. Just a little bit more brief, rapid fire kind of Q&A, something a little bit more fun. Is that something you're interested in?
Yes, sir. Let's do it.
All right. So what is the first question? What is the best book that you recommend? For a lot of us, it is Rich Dad, Poor Dad. You kind of touched on that earlier. What is your favorite go-to? And it doesn't have to be real estate. It doesn't have to be business. It can be mindset. It can be motivation. It can be whatever.
Mindset. Never Split the Difference by Chris
Oh,
Voss. I think it is the best psychology book in the world because it describes how people think.
yeah.
Yeah.
Yeah, no, excellent book. If you guys have not had a chance to read Chris's book, it's an incredible book on negotiation. Former FBI hostage negotiator. He's excellent. Great book on negotiation. All right, next question. What would you consider your superpower to be?
Knowing how to creatively structure deals.
Yeah. And it's an eye. It's like people, hey, you know what? Yeah, sure, of course. Okay, well, can you do that? Most people just don't have the vision to be able to see it, right? They're so used to operating within the box. Wait, there's something outside of there? I can do something different than what's the box? No, that is a superpower. So, all right, very good. All right, next question. If you could go back in time, you had a time machine, and you could go back and visit your 20-year-old self, what advice would you have for him?
That's a good one. 20-year-old self, scale matters.
Scale matters. Yeah, no, that's true. Yeah, and I'd love to pick your brain more on that, but it definitely does. It makes life a lot easier, but you can't get
Well,
there without that
we tend to
recipe.
be when
So,
we're young, we just say we're willing to work hard, but we're not working hard with a clarity and a focus.
mm,
And so I've really tried to focus now on how I help people do the business to say, this is how you scale it. Because everybody wants their time back. I already know what like at the end of the day, it's like, what do you want? You want your time back? You want less stress? You want more cash flow? Da, 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 da. Okay, well then how do you do that? It starts out around, even if you're small, how do you scale small? Scaling
mhm.
big is huge, but even scaling small matters. Scaling matters. I didn't quite understand that at 20 years old. I didn't understand that at 20 years old.
Yeah, no, for sure. There's so many life lessons. And this, again, this goes back to the earlier point. Like, how can we buy, right? How can we help to get in front of that time scale, really reduce the learning curve? And that's by talking to people such as yourself. Okay, hey, Eddie's got a lifelong of experience doing known investing. Well, guess what? You think he'd be the guy to talk to about structuring creative deals and talking about notes? Yeah.
Yeah.
All right. And then the next question. For the busy working professional, somebody's trying to work towards financial freedom, what advice would you have for them?
Learn to pencil out the math.
It sounds simple.
I found a lot of people that really don't know what they're making when it comes to real estate.
No, that's really good. And I guarantee you're 100% accurate. Most people don't know what comes in, what goes out, especially with their rentals, even in their personal life. Although maybe they're a little bit better with that. So no, that's really good. Well, Eddie, how can our audience connect with you? They want to learn more about how they can get in touch with you and how they can learn kind of about notes and learn from the master here. What's the best way for them to do that?
So I'd like to give them a little package. And a package means some spreadsheets, some books, some flow charts, some stuff that's measurable that you can have to keep and look at and study. Like what I think is good stuff, a compression of time. Secondly, a biggest compression of time is we have a master class where we put up these financial ideas and like lay them out in a way that you can see them. It's hard to see it me talking with my hand.
Right.
So how do we do that? And that is you're going to go to noteschool.com/Tri-City. And that way we know they're from you guys. And then we're going to give you a very efficient way to really analyze what's possible to say, hey, I like this, or maybe you say you don't like it.
Mhm.
But at least it didn't take very long to figure it out.
Yeah, awesome, awesome. And then they can be educated and say, hey, look, I've got another tool in the tool belt. Hey, if this
Yeah, I
deal
mean,
doesn't work, that deal doesn't work, then man, what did Andy
nobody
say
makes
about
a
those notes?
commitment until they know what it is they're interested in, right?
Right. Yep.
And so we're trying to give them as fast a way as we can do that as we can. So there's a good many materials and stuff that we're going to give them along with the master class so that because they're going to have questions and what about this and oh my gosh, I wish I could have that spreadsheet and run that math I saw Eddie run. Okay, well, we're going to do some things like that so that you at the end of the day say, hey, I've got some really good tools that
Mhm.
are going to allow me to play out a little bit of what Eddie and his team describe.
Yeah, no, awesome. We'll make sure we link that link in the show notes. So definitely make sure that you guys are, if this is at all interesting to you, and it's interesting to me, and so if that's something that's interesting to you guys, we'll make sure we link to that down into the show notes. Reach out to Eddie, see about how him and the team can help to educate you to level up your game, especially your overall investing strategy, but especially regarding notes. Well, Eddie, it's been a pleasure having you on the show. I'd love to circle back with you in the future. Maybe we can visit with you in Dallas at some point, connect with you and the team. So I greatly appreciate you. Thanks so much for hopping on and providing our listeners tons of value and hopefully open up their eyes to other possibilities. So thanks so much.
Awesome. Thank you.
Have a great one. Thanks, Eddie. Aloha. All right. Great conversation with Eddie Speed. I love his take on creative note investing and doing and having diversification, let's say, within your overall investing strategy, your portfolio. You can own property, you can own residential, you can own commercial, you can do some note investing, some private money lending. That's what I love about real estate is there's so many different ways to monetize different facets of the business. And he's exactly right. If you look at any city, the biggest buildings in every town are always dominating the downtown skyline are going to be the bank-owned buildings, the bank headquarters. And so this is an opportunity for you and I to be able to take advantage of that strategy, become the bank, structure notes, structure deals more creatively. It's going to be a very, very powerful strategy. Well, guys, if you guys are interested in investing with us, you can go to tricityequity.com to learn more, to connect with like-minded individuals and like-minded investors. If you're here locally in Honolulu, or if you're visiting, it's a great time to plan a trip. We host networking meetups every month. And so it's a great way to connect with other people who are looking to level up their game in the overall, to become better investors. You need a team to do that. You want people who, just how we're talking to Eddie, to know different strategies than you do. We always want to be open to that. So make sure that you're joining our group, Facebook group, Honolulu Multifamily and More. You can reach out to us direct. I'm glad to put you in touch and key you into the next meetup. We also have our annual conference is coming up. So the Hawaii Millionaires Mindset, June 19th through the 21st. That's going to be 3 days, absolute jam-packed business and real estate. We've got speakers, we've got teachers coming from all over the islands, all over the mainland. We definitely do not want to miss out on it. It's such a powerful time. I honestly think it's hands down the best conference that you're going to find about real estate, about business anywhere in Hawaii. So make plans to be there. MillionaireMindsetBlueprint.com to get your tickets today. And guys, if you found value in the podcast, make sure you're sharing the episode. We love to continue to grow the show. The only way we can do that is with feedback from you guys. So we'd love a 5-star review from you. Share the episode, and wherever it is that you're tuning in, make sure that you're sharing it with a fellow investor or somebody that you know is looking to expand their mindset regarding investing. All right, guys, that's going to be it for me today. We'll see you on the next episode. Go out and take some action, and aloha.